Before we get started, I did want to take a look at the market action the past 2 days. You saw I made some calls on Squawk, or sorry, on the Discord, related to what Squawk was saying, and also taking into account market profile. Okay, so let's take a look at the 11th. And if we head over to Discord, let's see, what did I say? All right, here we go. So this is in light of our market profile discussions, right? So if you could see here, I'll see if I can maximize this. This is a snapshot of the chart from the 11th, right? You see the 11th. Here's what happened, right? So if we zoom in on that day, what we're looking at is this. Okay, so what do we remember from our discussion about market profile? All right. Well, you see the initial balance forming here. Okay, and additionally, if you look at what Squawk was saying, we're seeing a pretty risk-on environment. Okay, so those are the two factors we have to work with. Now, I did mention that we had a gap up with very little momentum. Okay, remember what that could suggest. So basically, I didn't want to like spell it out. I kind of wanted you guys to think about it, but do you remember what that means?
Gap.
Yeah, so we have this gap up. We don't have momentum. Remember what that means?
Next day, I guess.
Right. Well, we're talking about in the trading day on the 11th. I have this gap. I have this gap up, but I don't have a lot of momentum.
Oh, forgot.
So it's okay, because remember that gaps form levels, and the space in between them is like a vacuum zone. Okay.
Oh, vacuum zone. Yeah.
Exactly. So now do you remember? It's okay. We're kind of doing this to review and motivate the material, because
it's a paper trading, I guess, in there.
So if you see this gap up and you don't have much momentum, which we don't really see, the volume, and you could tell that because the volume drops off very quickly here, that suggests that we're going to close the gap. What does close the gap mean? Well, it means that I can basically anticipate to close the gap, right? To fill this vacuum zone and hit on yesterday's close. And if you see, that's exactly what the markets did. Okay, so it touched exactly where the close of yesterday was. That's called closing the gap. Okay, so exactly the things we covered in last class, if you remember, we showed several examples of that, and we saw the exact thing happen yesterday. How cool is that, right? However, if you noticed, again, Squawk was risk on. Okay, so how do we make sense of this, right? So again, this is a little bit, we're starting to see these indicators and how they work and really, really get to know them. And just because Squawk says that we see risk on, you don't just press the buy button, right? You want to wait for your opportunity. You know where the markets are headed. Okay, that's important. You know where the markets are headed, but if you just press the buy button blindly on stocks, for example, you may be left holding an empty sack, right? Because retracements happen. You have to take into account your market profile and your other indicators, your other conditions, intermarket correlations, all that stuff. In this case, we're taking a look at stocks using our market profile, and we saw this nice retracement that I spelled out for you guys in the Discord, okay? The second day, we saw the same thing, right? We saw a gap. Again, risk, Ghost Squawk was telling us, we could find that here. Ghost Squawk is still telling us we're risk on, and you see it's pretty powerful, right? It's the 23 risk on, 9 risk off, and neutral 17. That's a lot of articles that are in the risk on direction. Okay, we did see a nice gap up. Okay, validating Ghost Squawk's assessment of the risk from yesterday. Okay, and again, we didn't see this momentum that the same kind of picture as yesterday. We had a gap up, but we did not see the momentum. We did not see the momentum follow through, just like with yesterday. But this time, the markets kind of drifted upward. Okay, so these rules are very, very high probability, but no rule is 100%. We did see this gap. We did see a retracement, but if you remember levels and what they do, relative highs form levels. Okay, so if you take a look at yesterday, we had this little zigzag type pattern, and each of these relative highs form a level. So we have this retracement here. That part is correct. It's just not the kind of retracement that I was anticipating. The retracement only came to here. Okay, and that you can identify these with levels. I'm going to show you how to do that with Fibonacci's again in a second. We can actually validate that. So there's more than one way that you could draw your levels and have things agree. All right. So questions so far?
No.
Okay. So the second part is how you would trade that. Okay. So again, if I rewind the clock and now I have introspection, I see now I have introspection to what happened that day. So it's kind of not fair. My commentary is in hindsight, but this is true for basically all situations like this, right? If I see this gap and it didn't happen and it didn't, it failed to follow through, right? You see that the volume drops off drastically. There's no momentum. Again, what does that mean? That means I'm likely to at least touch the close of yesterday to close the gap. Okay, so that's fact number one. Okay, so are you with me on that? You understand why? Okay, good. Now, Ghost Squawk is telling us that we're risk on. Okay, so what does that mean? That means you should buy stocks. Okay, so how do you think we, just knowing that information, not knowing what happened, what the outcome was, what do you think we could do as far as trading ideas?
Which see which stocks are going up.
That's true, but my point is that Ghost Squawk is telling us we're in a risk-on environment. And you're going to see this later, that basically all stocks kind of act the same.
Yes.
Obviously, there's some exceptions and some sectors act differently and so forth. But because we have indices, a lot of the stocks will work in tandem with the indexes. Okay, so what the big stocks are doing, they're going to do it too. So yes, you can apply this material to individual stocks. Market Profile was really designed for stock trading, although it is actually very good with futures too. Okay, but really what I'm getting at, let's just assume we're trading the SPY or even the futures contract. How we would trade this, there's two options, right? If I understand that I can close this gap, you might consider shorting, right? If I place a short order anywhere up here, I could ride this down to the close. That's option number one. Option number two is we could buy on a dip. Now, based on those two options, which do you think is the more high probability of success?
Shorting? Yes.
Yes and no.
No.
So the answer is, as you probably are starting to see right now with trading, the answer is not quite so clear cut. The answer is not a simple yes or no. So we know the market direction is going down, right? Or at least we have a pretty good idea. We already see what happened, but let's rewind the clock to to back here. We don't know that we do know that the market is going down, but let's say I shorted. Where would I short? Well, that's not quite so clear cut, because remember, every single trade that you make, you have to understand risk management. So just knowing where the market is going is not good enough. You have to be able to apply your risk management. So here's like my personal philosophy on this. I mean, if you just wanted to short and hope for the best and ride down, I don't really like that strategy, because the risk management is not well defined. If, however, you were to say, okay, I start to see these, this top forming, and then you start to see it go turn right here, you might want to consider shorting somewhere around here and placing a stop loss up here. The reason why I still don't like the short trade is because it disagrees with Squawk, right? It disagrees with the market sentiment, and that being risk on. Okay, so what you want to try to do in trading is if you take a trade, no one's holding a gun to your head and telling you how and forcing you to trade, okay? So worst case, you just don't do anything, okay? But that being said, when you do take an action, when you do place a trade, what you want to make sure is that you're agreeing with all of the data that you have at hand. Okay, so yes, I can anticipate this gap, to fill the gap, but that's going against the risk on climate that I'm seeing. Okay, so it could have happened, even though it didn't, and we know this obviously because we see the results, but it could have happened that the markets catch on to the risk on sentiment of the day, and buyers clamor on and they push the price up and wash you out of your short position. Okay, so I think, in my opinion, the long trade, a long position would have been the smart choice in this situation, because we know the market's going up, and we know the market will go up, as we saw here. And we actually have some good news, because if we know that in the meantime, in the short term, the market, is probably going to go down a little bit, that means I can get a really good price. So here's what I'm getting to is this. Okay, how I would have set it up is to place a limit entry at the close. Okay, what a limit order is, it will not enter a trade unless the markets go down to your price. Okay, so if I buy at market, you get filled anywhere up here, right? And wherever you hit the buy button, and that's subject to slippage and some other things that we'll cover later. But if I set my let's see, let's put a arrow there. Okay, so if I set my, if I set my limit order right here, a limit order will not, let's just change. Okay, so this is actually kind of good for you, so you could see the details of the drawing tool here. So I'm going to put a green arrow for entering, right? If I enter my trade here, or if I set my limit order here, that limit order will not execute unless the price hits it.
Yes.
Okay, if it just goes off somewhere, then it just won't enter, and it will eventually expire. So worst case, you just didn't enter the trade. You didn't lose money, but you didn't enter the trade either. Okay, best case scenario is you get the price that you want. Okay, so that's how I would have structured the trade, and that was what I was really getting at with that question in Squawk. Hopefully some people took my trade idea. It's hit or miss. Sometimes people do, sometimes people don't, but the advice is always there. Okay, so let's talk about, so is that clear for yesterday's trading situation?
Yes.
Okay, good. Any
So,
questions on that?
no, not so far.
Okay, perfect. So again, just to
Hey,
recap,
just
yeah,
just one question. I forgot.
yeah.
Why was this gap in there again? Because of the volume?
Why the gap happened? You talking about here?
Yes.
Uh,
Yes.
I,
Yes.
I don't know. I don't remember the market situation. I think we had some good data come
Oh.
out or something that really pushed up the price. And don't forget when you okay, well, regardless of the data, when you see this rally from yesterday, notice that this is a very strong trend day, so with the exception of here in the middle. But you see that this this rally just shoots up, right? In
Yes.
particular, we see a bunch of buying toward the end of the day. Okay, what that suggests is that buying is going to bleed into the next session, right? So the Asian stock market is going to do very well. And in the morning, buying will continue in the American session as well. I did have a slide on that. I had a slide on that when I discussed gaps. It's drops. Here it is. Yeah, so we see increased volume from the day before and buying pressure in the morning. Okay, the only difference between this example here from my module and what we saw here was that in my module, the buying was sustained. Look at the volume. It drops off very drastically. Okay, whereas in my module, it was sustained, right? You see a bunch of big bars. Okay, so regardless of the data or political climate or whatever happened, you can infer that if we have buying at the end of the day with, I'd say probability maybe 60%, 60, 65%, you're going to see a gap the next day, or at least the trend to continue. But again, you need to see need to see buying with volume at the end of that day, or else you could see a retracement. Okay, so again, price is going up, volume is here. So does
Oh.
that make sense?
Yes. Yes.
Perfect, perfect.